I mean, this year's been a year I think that many people have so far found frustrating because everybody wants exponential price rises and every number to go up, and it's not been that kind of year. Things like the economy have been relatively slow for normal people, and that's a function of this business cycle not picking up, rates staying high, and the fact that they didn't need to refinance the debts in massive size this year, but it all comes to next year. So it's been really a patience game of the sideways choppy market. As soon as the government reopens in the next few days, we'll start to see liquidity flowing back in. Then we've got the Federal Reserve cutting rates. Then we've got the Clarity Act coming. Then we've got some changes to bank regulations to allow them to hold more reserves. And before you know it, the whole liquidity flywheel kicks off.
Raoul begins by acknowledging the emotional landscape. This year hasn't matched the explosive expectations many investors had. Instead of a broad, dramatic bull market, prices have surged in isolated pockets while much of the market remained stagnant or corrected. Bitcoin made a new all-time high, Binance token surged, Zcash even saw impressive runs, but Ethereum, Solana, and most major altcoins haven't broken their previous highs. This disconnect confused investors and pushed Raoul into a deeper macro investigation. His conclusion? There is a structural reason for this odd, choppy, sideways behavior, and it all comes down to liquidity.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
So I mean, this year's been a year I think that many people have so far found frustrating because everybody wants exponential price rises and every number to go up, and it's not been that kind of year. What we've seen in the background is this massive change in regulation in the US. So the background is incredibly positive. Passing of the stablecoin laws, we're still waiting for the Clarity Act to come through. We've seen pretty much every bank and financial institution, so they're going to build on blockchain rails. So we've seen the rise of the ETFs, the DAT. So we've seen this whole kind of Wall Street infrastructure build out on crypto. And you would have thought, had we have said this before, you'd say the number was much higher. Now, obviously, Bitcoin hit new highs over the course of the year, but still things like Solana and Ethereum still haven't really broken to new highs versus the last cycle, which is confusing people. That sent me down a rabbit hole of, okay, what's really going on here? And the kind of foundational work that I did called the Everything Code was based on this 4-year cycle to do with the 4-year debt maturity of the United States and most countries. And I redid the work and found out that in 2022, because interest rates got down to zero again in 21 and early 22, they restructured the debt to 5 years. So it's added another year. So we've got this weird kind of hybrid extra year that we've never had before. And we've seen that in things like the business cycle. The ISM survey gives us a guide of the business cycle. And people talk about this K-shaped economy where, growth stocks have been going up. But meanwhile, things like the economy have been relatively slow for normal people. And that's a function of this business cycle not picking up, rates staying high, and the fact that they didn't need to refinance the debts in massive size this year, but it all comes to next year. So it's been really a patience game of the sideways choppy market, but people forget also, last year was the same. Last year peaked in somewhere early in the year and then did nothing all year. Everyone got so frustrated, everyone was flinging poo at each other online and getting angry with each other. And then before you know it, took off like a rocket ship in November and December. And I think it's somewhat similar this time around. And the rocket ship this time around is based on the fact that they've kind of not been adding liquidity into the US. That's the magic formula that drives the price higher, the debasement of currency. And what they've done, what's happened is there's various mechanisms they use to add liquidity. The classic used to be quantitative easing, where they just print money and put it on the balance sheet. But this time around, they've not been doing that. They've actually been tightening. And so then they have this mechanism called the reverse repo and then the Treasury General Account. And these things they've been using. And what's happened is the government shutdown has stopped the government actually spending money, which means that they've held back and maybe $250 billion of stimulus that needs to come into the economy. So that, as soon as the government reopens in the next few days, we'll start to see liquidity flowing back in. Then we've got the Federal Reserve cutting rates. Then we've got the Clarity Act coming. Then we've got some changes to bank regulations to allow them to hold more reserves. And before you know it, the whole liquidity flywheel kicks off. The stability is a double-edged sword. It's kind of institutional investors prefer the less volatile approach. It still does decently well. But retail investors who have their hopes and dreams in the power of the returns of crypto then get angry and frustrated that they're not getting those returns unless they've been very selective in what they've bought. There's certain things. I know the Binance token hit new all-time highs. Bitcoin did, which in this massive run recently in Zcash. But a lot of these things don't stick for very long. So what we found again is like this bifurcation where some projects have done really quite well considering the stability-based environment, but a lot of other stuff has bled 50% or 40% in the meantime. So it's kind of weird. So stability is a good thing because it attracts more institutional capital. It's a bad thing because it keeps retail away. So retail investors went to tech stocks instead because there were easier returns. So if we think about 2025, the issue is if the liquidity pie didn't grow, then these narratives, they catch traction, but it means other things don't because you're recycling the same money. Mm-hmm. So you keep recycling the money, and then before you know it, you're buying the highs and it collapses back down again until the liquidity comes in, and then you can anchor these narratives that are more pervasive and can last longer. So I think the privacy narrative makes a lot of sense considering where Europe and the UK has been so far in this whole crypto equation. They've been kind of very, very cautious. And so people are concerned about that and the central bank digital currencies and what they're trying to do with that. So I think this one lasts. Obviously, it won't go up in a straight line. It has done, but things need to correct. I don't know where the next narrative. There's always a narrative in layer one somewhere. What's the new, faster, getting traction layer one narrative? And then it feels kind of wide open. Often it starts with people look at cash flows and DeFi and say, well, this protocol's producing cash flows, and later in a bull market, nobody cares about cash flows. It's then super narrative driven. We've had the rise of hyperliquid. It's not yet clear to me where the next new narrative comes from. Maybe it just comes from the broad stablecoin adoption from the financial system and who's building on what chains for that. I think that's a big one. And again, I'm not really clear what the next narrative is until liquidity comes and the market will start to focus on the core things. But usually in the latter part of a cycle, what you get is like a hyper focus of 5-6 things that go up a lot that really catch the market's attention and feeds on itself. But it's not yet clear what those are.
Yeah, it's never normally clear until you're already on the roller coaster. But it would be interesting.
And you don't want to believe it either because in the prior years, they go up and then they come back down again. You're like, really? I mean, it could be AI and crypto again, because that's not going away either. So, but we just have to wait and see.
Raoul emphasizes the behavior pattern. When crypto hits new highs, investors recycle gains into luxury assets, digital art, watches, high-end collectibles. He predicts digital art will return to $20 to $70 million sales. Blue chip collections will skyrocket. Ethereum price appreciation will fuel this cycle. Wealth effect in crypto is the primary driver. The pattern is identical to past cycles, and Raoul believes we are on the verge of repeating it. Raoul concludes with reflections on the crypto community. They feel prepared and educated thanks to macro frameworks provided by thought leaders across Real Vision. He emphasizes that patience is the key and that many investors underestimate just how early we still are in the liquidity cycle.
You see how this works is when the market goes back to new highs or near the highs, people recycle gains or their optimism into longer term assets, things like digital art. And so that happens, and as we came back down to the bottom of the range, we saw the digital art market slow down again. But as we start breaking, particularly Ethereum, 5,000, and let's say the big positions people have, stuff like Solana, once that starts really breaking new all-time highs, you'll see a lot of money getting recycled into these long-term kind of trophy assets. It's exactly the same thing that people do with watches. It's really interesting. It's all driven actually by the business cycle. So whether it's watches, fine wine, or digital art, they're all driven by the business cycle. So once people are starting to make money, have a bit of excess earnings, they recycle it into trophy assets. So that, again, lies ahead. Once we start breaking new highs, we'll see a lot more of this. And I think people are going to be really shocked at the price some of this art trades at. You'll suddenly start to see things like, a piece of digital art trading for $20 million. I mean, they've traded as high as 70 million in the past, but these are big numbers, and we will see that all over again. Interesting enough, for us, we're actually relaunching an entire new community-based platform experience so people can really dig into these communities, whether it's, larger interest groups like crypto, or whether it's down to specific tickers and things like that. So it's going to give us a lot of signal from that. Generally speaking, I think we've managed to really help people be patient and not to mess up how to invest in the cycle. So I think there's a lot of gratitude around in how that's worked out for people. People are looking for the next big opportunity set. I think there's a lot of people focused on the AI trade, trying to figure out, how do I do that? Where's the nexus of crypto and AI? They've been looking at that. I think there is general still sense of frustration that prices really haven't gained enough traction yet. But overall, I think the community itself seems to be patient and understanding because we've given them the kind of macro frameworks of understanding, and not just for myself, but a whole bunch of people who appear on Real Vision, to give them the kind of confidence to understand what it is that's going on. So again, I think they are working hard on trying to find the next narrative, the big narratives that come. And again, the signal hasn't come from that, but again, I see it around privacy. I definitely see it around digital art. I definitely see it around AI, stuff like Tau and stuff like that, and people trying to figure out, where that real opportunity lies, and whether things like DEXs and other DeFi opportunities that have cash flows are the big investment opportunities or not. So I do see them doing a lot of that. I've seen a lot of work from Jamie Coots, who's our chief crypto analyst, on kind of all of the major protocols, what the rise of stablecoins means, how this fits into liquidity. So I think stablecoins is another feature. It's not really investable so much as, does it drive activity to the underlying chain? So, we look across that as well. So I think overall people are optimistic, but a bit frustrated. Most of the people I know, and it'll be nice to catch up with them. So,
yes.
It'll always be good to catch up with people like Tom Lee. Haven't seen him for a while. Michael Saylor I've actually never met. So it'll be nice to actually say hello to him properly. Catch up with CZ again, because obviously I interviewed him last time at Token 2049 in Dubai. So yeah, there's a lot of interesting people. I mean, he's got a super stacked lineup. And I just think it's going to give a lot of broad perspectives because it's not narrowly focused on one area. You've got people talking on all types of aspects of crypto. And I think, I'm really looking forward to it.
We're thrilled to have you.
You for organising all of that lot. I'm not hurting to get that lot on a stage.
What may feel like a slow or confusing year on the surface is actually the foundation of an explosive next phase. With historic regulatory progress, institutional adoption, major liquidity injections approaching, and a delayed business cycle now realigning, Raoul believes the rocket fuel for the next crypto boom is almost ready. The sideways frustration many investors feel is not a sign of weakness. It's the calm before liquidity returns, narratives ignite, and digital assets reprice dramatically higher.